Hey folks, Dan Frio here of The Opening Bell with Dan Frio. So today we're going to talk about what we always talk about. I call it scrub, okay? Meaning stocks, crypto, real estate, and bonds. You should be, if you're diversified, you should be in all of the above. Bonds, maybe not necessarily until you get older, especially in today's environment. So I'm not a huge proponent of bonds until you get into your 60s or so, because that's just a safe haven. You put your money there, you don't worry about it, you know you're getting an X amount of return. Don't look at the prices or anything, just watch the yields. So basically we focus on stocks, crypto, and real estate. Thursday and Friday I have specials, and it's booked, guys, finally booked. We're going to explain to you what cryptocurrency is. What is Bitcoin? What's Ethereum? What's all this other stuff? We're going to explain that in the simplest terms we can. And then how it functions, what's the purpose of it, and then what a lot of people are asking is, Dan, where do I buy it? Or how can I buy it? Just for purposes, I'm not a stockbroker. I'm not a wealth advisor. You can't go through me to buy stuff. I'm not recommending anything. Basically, what I want you to do is think. Think on your own, do your own research. I'm going to just open up some doors for you to say, okay, here's stuff, that you might want to, at least look at and why, and then do your own research. And I'm going to show you how to do some research, how to do some following, and ways to protect yourself. But this is to educate and entertain you guys, so don't go away. We'll be right back. So right now the markets are doing well. Okay, today. It's like this, so you have to be very careful. You can't have you can't go into the market being skittish or scared. If you're playing with scared money, please just put it in a savings account or something, because this market will drive you absolutely bonkers. One day it's down 500, next day it's up 600. I look at my portfolio and I'm getting returns in dollars of in 5-figure money, and then the next day I lose that 5 figures plus. Then the next day I'm up 5 figures plus, and it drives you crazy. So that's what's going on right now. So let's talk about the stuff that's in the headlines right now. Are these: Johnson & Johnson came out with a one-shot vaccine that's supposed to revolutionize all this pandemic stuff. So the thought process is there. I'm just going down the stock route. I'm not buying Johnson & Johnson for that. I think there's going to be a glut of vaccines in the next few months, because everybody's rushing to this, and we're going to have a glut. So that's my thought there. The next thing is the stimulus package. It's going to pass. It's supposed to, I think, pass the House in the next couple days, or Senate. I'm sorry, Senate. It already passed the House. It's going through the Senate. The odd thing is, trying to look up, if you guys can find it, give me a link down below in the description or the comments. Where can I find a breakdown line by line by line of where the money's being spent? I don't know why it's such a secret, but I bet you when we look into it, we can figure out why. There's probably so much pork in that thing that's nuts. Like, for example, and this isn't a political channel, or I'm not trying to ruffle feathers, what does the $15 minimum wage have to do with the coronavirus? Nothing. Yes, we should help out families that are devastated by this, everything that's going on, lost their jobs, so forth. Should we be helping families that are doing well? Like my family, I'm not bragging or whatever, but life ain't bad. The mortgage business we haven't skipped a beat in the last couple years. Do I need a stimulus check? I don't qualify, but I don't really. And I don't want free money because it's not free. Okay, everything has strings attached to it. So that being said, there's a lot of bailouts of states that are fiscally unresponsible. Like, I live in the state of Illinois. We have our taxes, real estate taxes, are absurd. I think we're the second highest in the country. Our state taxes, absurd. But the state is broke. How? And if you did a forensic audit of the financials, you'd find out why. And probably a lot of people would go to jail. So that will never happen. So should Illinois be getting stimulus money? Should Portland? And I'm not, again, guys, I'm not, this isn't a political channel. You're in there burning down fire departments and so forth. So should you get a stimulus money to rebuild the places that you burned down? it's a hard one to swallow. So if you're in Portland, I apologize. If you're on, if you were part of that, but if I burned down my house, I wouldn't go to the state and expect them to, subsidize me for all that stuff. So that's all on the political side of things. And again, I'm not going right or left or whatever. I'm just saying, what my thought is, and hopefully those are equal to yours, or, give me your feedback down below. But this isn't a political channel. I don't want to start a debate on that. I'm here to educate you guys on stocks, crypto, real estate. We'll leave the bonds out for the next short duration of time, in the next several months. And we'll dabble down there in sections, but that's not a great big investment that I think a lot of you guys should be looking into. So let's get on to what's going on in the market today. Well, again, the stocks are based right now on the vaccines to squash the pandemic and stimulus. So the last week, the in vogue words were, Treasury yields and so forth. Those have kind of taken a back seat. They shouldn't, because it's a big part of the market, and it's something that's really going to affect the markets. So right now we see stock mix after best sessions since June for the S&P 500, as well as the Dow and the NASDAQ were up huge yesterday, all over 2% returns yesterday alone. You go through, let's see if there's anything here. Automatically stimulus check, extra jobs, my Microsoft, closely watched. Nope, nothing there that we can really go over. But again, guys, if you would, please try to find a link for me that explains the stimulus package in detail, and we'll go through that line by line by line if it's not too much. And I'd really like everybody's feedback. Merck will help with Johnson & Johnson's COVID. So again, it's all COVID-related things and stimulus packages. U.S. stimulus. I'm trying like heck to find it, but I can't find it. Here's what's weird, guys. This is, I go to as many websites and things to find out as much information as I can. I do this all day, every day, even at nighttime. I go to my room about 9 o'clock, put on all the YouTubes and all kind of different information, as well as my laptop, and go through and try to find out as much information on what's going on in the economy and so forth for you guys and me personally. If you go through here, though, it says gold inches up on weaker dollar. Okay, that's that. Then you scroll down, gold falls on firmer dollar. These are the headlines. And if you really dig down to the dates, you can see, like, why are they posting on here gold January 26th, February 10th? Guys, it's March 1st. So if you were to first go to this, be careful, because again, unless you really read the fine print, is gold up or down? Is the dollar up or down? So that's why I'm trying to pull back the peelings of the onion on this for you, to give you the facts behind everything, and then at least drive you to areas where you can at least think on your own, and provide you also information on where to go to find all this information. So again, the stock market is all over the map, and it's the virus, the pandemic, the stimulus, employment, Treasury yields, and all the other stuff. So I'll keep you up to date on what's going on with that. But today we have let's go see what's going on with the markets. We got the S&P down 14, Dow down 70, NASDAQ down 112, so it's given back. Again, yesterday we were up, I forget, 2%. Today we're down almost 1%. It's a yo-yo, guys. So you got to pick in. I always suggest, and I do it myself, dollar cost averaging. What that means is you set an X amount that you want to invest, and you do it weekly, bi-weekly, monthly. Let's say, okay, my goal is to save $500 a month. Well, you know what? Every week, go in and put in $100. I know that might not equate out to perfectly $500 a month, but I'm just giving you ideas. So when the market is way down, you're buying more shares. When the market's way up, you're buying less shares. And it averages over time, so you're not taking a bath if you just jump in, both feet at one time. So that's what's happening there. What I want to also discuss is we used to go through a fear index. We're going to start doing that again, so I can show you some other techniques or things to watch. But there's another thing is called the VIX. Basically, think of the VIX as VIX is a ticker symbol, the popular name of the Chicago Board of Exchange, volatility index. This basically is telling us when it's way up, the market's kind of spooked. When it's down, the market's calm. Then the other thing that I follow, so that's the VIX. When it spikes and draws back, normally if you can catch this right here at the top and it's a spike, you can do pretty well. You can, that might be a day to dollar cost average. When this is a spike, there's also a swoon that goes up and then lingers and comes back down. That's not good. Spikes is a signal point that I use to buy. So that's one area that I follow. Then you can also go to CNN posts a fear index. Right now it's saying greed. Okay, 64 is in the greed index, but not greatly strong. When you're down in this range here, that's when the market is way oversold. So that's when I'm cautious and I'm like, I might start limiting some of my positions if I'm looking to sell, or things like that. But if you dollar cost average, the way to go is follow a lot of these indicators before you pull the plug, or just put it on auto dial and put in $100 a week and just let it ride. But what I'm trying to explain to you too is what am I investing in? So we go to Charles Schwab. Love this system because their website is really, really simple to use. Here's our watch list that we watch on a daily basis. So the staples that I have are Google, Amazon, Apple, and Facebook. It's called FANG. Okay, there's Netflix in there too. I don't own Netflix. Wish I would have. I used to use their services about 20 some years ago when they first came out. I even mailed, believe it or not, the creator a letter saying, if you guys ever go public, please let me know because this platform is amazing. I never heard back. And I wish I would have followed that because my returns on Netflix would have been a gazillion percent. But let's look at Google is up $5 today. Amazon up $4 today. Apple is down 1, but it had a big run yesterday because Berkshire Hathaway put in some buy recommendations on Apple. That is Warren Buffett. When he talks, the markets watch and listen. And Facebook is up 14 cents today. Nothing major, but I'd rather have green than red. Another position that I've been adding to on a weekly basis is my Ford exposure. Great company, great cars, and they're a good electronic vehicle play. It's up 2.75% today. Okay, so those are my staples. I've been adding to my positions in, let's see where Disney is, and XLF. Disney is up 39 cents today. Again, rather have that than have red. And there's an XLF. This is basically a basket of stocks in the financial industry, such as Citibank, Wells Fargo, and such. This will be a good play in the environment where interest rates are going up, because there'll be bigger profit margins for the banks. So now let's get to my crypto positions and what I've been adding to in my positions, and this I do religiously on a week-by-week basis. We go through and we have Bitcoin Cash. This is not Bitcoin, it's Bitcoin Cash. There's differences in this, and we're going to talk about that Thursday and Friday of this week. Bitcoin Cash is up 4% today. Guys, these are all today's returns. 4%, you don't get that in your savings account. If you put money in your savings account, it wouldn't equate out to a 4% return for about 10 years. And I'm not exaggerating. That's probably the truth. Check your bank statement, savings account. Bitcoin is basically flat today. Ethereum is up 1% today. I have probably my biggest positions are in Ethereum because this is the platform that Bitcoin and most of cryptocurrency trades through or on. It's their technology. Then there's blockchains that run on the Ethereum platform. And again, guys, we're going to tie this up into a nice bow Thursday and Friday so you get it. But the blockchain is the technology behind how all this cryptocurrency works. So my positions there are Hive, which is up 2% today. Mara, which is down 6. I actually got out of my position. My stop loss kicked in on last Thursday on Mara, and I got out at 40. But it's down today. So I don't know why this is taking a bath, but that's where my stop losses come into play when I'm not really paying huge attention to these things, which I do. But if I go on vacation, I set these when I went to Florida, and I never took them off because I was like, I'm going to just keep them there. Riot is down 5.7%. Guys, I got into Riot at about $10. So I'm I got a 4x on my money there. I have a position there. I think I have a stop loss of a big chunk of this at 50. So hopefully that doesn't hit today and kick me out, because this is really volatile. But at least I wanted to cover some of my profits. So that's what I have in that realm. But again, when the world opens back up, I'm saying Disney's going to do very well, very, very well. And that's where I'm adding to my positions there. So let's go on to cryptocurrencies. Where's crypto today? Bitcoin is up 0.68. Ethereum is up 0.1 or 1%. I also hold positions in Litecoin, which is up 4% today, and Bitcoin Cash, which is up 9% today. We also have a 7-day returns on these. Litecoin is up 1.5. Bitcoin 2.78. I'm sorry, Bitcoin Cash was 2.78. Bitcoin is basically break even. Ethereum is break even. So that's where we are there. The stimulus will be passed in the next couple of days. The $1.9 trillion stimulus package should devalue the dollar, right? Ooh, we got a reversal. This was just up about 10 cents a little bit ago. So this is crashing. And let's just see what we've done in the last day. Look at this move right here. Look at the move, guys. I said yesterday we will be trading. We're about 50 base or 0.5 basis points over what I was thinking, and now we're below the line. Great news for cryptocurrencies. Not so great news for the power of your dollar. What's going on with the mortgage industry or mortgage rates? Great news here. Mortgage-backed securities are up. The price is up 3 ticks. When the price goes up of this bond, mortgage rates come down. We like when this goes up. We had a nice reversal in the last couple of days. We went from here all the way up to here. Great reversal. I've been saying we should be trading at this red line right here, and that we would get there probably within a couple of days. And I said that back down in here. Feel free to check out my videos. And we're all the way up to this level right here. 10-year Treasury. I want this to be 1.4 or below, and we're getting there fairly quick. This was completely spooking the market. What happens here is when the U.S. Treasuries hit a yield over 1.4, especially 1.48, that's the trigger point, that is the same return that you get on stocks in the S&P 500. So the S&P 500 dividend yield is 1.48, approximately 1.45 to 1.5, okay? So basically, that's the trend mark that a lot of the wealth advisors and financial planners look at. They're saying, well, if when this was trading at 0.5 and the S&P returns were 1.5, triple the rate of return, you're going to buy stocks all day long. As this number goes up and up and up, which we almost peaked 1.6 last week, it exceeded the S&P 500 dividend yield. So people were moving out of stocks as we saw the stock market crashing and moving into bonds, thus causing this to spike fast. Let's look at this. Look at this. I mean, look where we were not too long ago, and it spiked all the way up to 1.6 and above. That completely spooked the market. Okay, and that's why you saw a sell-off in stocks and everything else. So that is my report today. Feel free, please check me out on my channel. I am a mortgage guy. I'd love to help you with your mortgage. If you're building a house, buying a house, refinancing, or in forbearance, the old scary word forbearance, and you're like, what's my exit strategy for my forbearance? Well, I have a video coming out later this week that is going to explain that in detail. But what I ask you to do is don't overthink it, guys, because every lender is a little bit different. Every bank is a little bit different. Your scenario is unique to you. So what I'm asking people to do is call, or I just added in my YouTube videos down below. You can click Calendarly, set up a one-on-one appointment with me and my team that we can walk through all your questions and concerns and help you get an exit strategy. So God bless, guys. Watch my video tonight. It usually launches about 5 o'clock Central Standard Time in regards to the mortgage industry, and it's real estate related, period. So that's it for today. God bless, guys. Thanks for watching. Give me a thumbs up, please. Give me where you can find the stimulus package, where all the money's being spent down below. So I will see you later today. Take care, guys. Bye-bye.